legislation to permanently extend the 2001-2003 tax cuts. And my question is to all of you, and we'll start with Mr. Johnson. Do you think this is going to provide businesses with some predictability in the tax code, which would allow them, obviously, to purchase new equipment, keep their head above water, hire more workers, whatever the case may be?
There is undoubtedly a nervousness in the small business community about where are we going next. It's the whole program, but certainly there is fear about committing to spending money for anything because we don't know where we're going. We don't know what we're going to be doing a year from now. So that certainly would be a step in the right direction to help us get started.
Mr. McMillan?
I would echo Mr. Johnson's comments. In the world of the entrepreneur, which primarily includes most real estate practitioners, predictability is extremely important. And there's a reticence to expand and extend your resources and capabilities without that degree of predictability.
Mr. Mursky?
Well, without extending the 2001 and 2003 tax cuts, you could see marginal tax rates on small business income exceeding 50%. The tax that you're talking about includes dividends, capital gains, the individual income tax, and as we pointed out in our testimony, that half of small business income would be subject to an increase in the individual income tax if those rates would go up. So it'd be very important to preserve the rates that are on small businesses now and not have that fear that tax rates are going to go up and scare off investment in small business.
Mr. Woods?
I'd say it's an unequivocal yes. And I think, and you could look at it in two different perspectives. As somebody who used to run a subchapter S company, I think the important word that you brought up was the predictability. I personally would make decisions of having to invest in my company depending on what's going on, my personal money, and knowing what was going on from a tax standpoint and what I would have available for money to actually put back into my company was critical. Not understanding what might happen certainly left me at odds as to whether or not I needed to keep money on the sidelines, not knowing what would happen next, or whether I can put it into my company to be more productive. So, no question.
Absolutely. What we've seen in academic literature is that permanent tax cuts provides a lot more economic growth than temporary tax cuts for some of the reasons that my co-panelists have already espoused. Predictability, stability are very key for the business sector and for economic growth. If you're looking forward to whether or not you're going to make a decision to invest, perhaps, for example, in a small business startup where their small business will expand, being able to predict what your tax rate is going to be, how much you're going to put at risk in the economy, those are important factors that go in economic growth. And because investment is so far looking, one of the biggest impacts the possible expiration these tax cuts are going to have are going to be hinder investment.
The chair recognizes Mr. Ellsworth.